If you would have invested 1 lakh rupees in this stock at IPO 4.5 years ago, it would be worth 7.2 lakh rupees today. 59% CAGR every single year, earnings before interest and taxes, 40% margin, zero debt, and the analyst predictions are truly amazing. Here's the full breakdown, including verified compounding numbers and exactly how to invest. Day 15 of 30 days, 30 stocks. Data Patterns India, founded in 1985, headquarters is in Chennai. 40 years of in-house defense electronic design, one of the longest track records in Indian private defense manufacturing. They build radars, electronic warfare systems, fire control systems, naval systems, space systems, and automatic test equipment. Their products cover every platform: air, land, sea, and space. Their clients include DRDO, Indian Navy, Indian Air Force, Indian Army, and ISRO. They recently won a 380 crore rupee contract for 9 precision approach radars for the Navy and Air Force. And they're now entering drone detections and jamming systems, the fastest growing segment in global defense electronics right now. DRDO is their most valuable customer. The Make in India defense policy mandates that 75% of defense procurement must happen from domestic manufacturers, and Data Patterns is one of the few private companies that can actually meet that bar. Here's what analysts project for the next 3 years. Current price approximately 4400, bull case target 6500, a 51% return driven by full earnings delivery, sector re-rating alongside BEL, and sustained institutional buying over 2 to 3 years. Base case target 5400, a 28% return driven by 15 to 20% PAT in financial year 27 and continued order book execution. Here's what the compounding numbers will look like. At 28% CAGR over the next 3 years, 1 lakh rupees will become 2.9 lakh rupees. At 50% CAGR over the next 3 years, which is closer to Data Pattern's actual historical return, 1 lakh rupees become 3.3 lakh rupees. For comparison, a fixed deposits 7% will give you 1.2 lakh rupees over the next 3 years. A completely debt-free company with 40% earning before taxes margin, 216% jump in order inflows, and the government's own indigenization policy as its sales engine versus a 7% fixed deposit. The comparison isn't worth making. Now to the interesting part. Should you invest as an SIP or lump sum? Data Pattern stock moves according to contract announcements and delivery milestones. When a large DRDO contract is announced, the stock spikes. When a quarter shows low revenue because deliveries are pending, the stock dips. This means a staggered lump sum approach works here. Divide your investment in 3 parts. First part should go in now. Second part if there is a dip at the next quarterly announcements, or if there is a temporary dip caused by delivery timings. Just remember, the business is not deteriorating. Stock 15 of 30. Stock 16 drops tomorrow. Follow Backbone India for more.